Ladies and gentlemen, welcome back to another volatile day on Wall Street. Following some data that came out suggesting consumers are actually now worried about job security. They're actually cutting back some of their spending activities, and they really don't have high hopes for what equities will do over the next year. Now, we also have some comments coming out from Trump that is adding to some of this volatility today. Here in this video, I will share everything you need to know about this market and about Tesla. And I think we should actually start with what Elon Musk just said, because Tesla's down roughly 1% today, around $250 per share. Guys, remember, if the stock's up 5% or down 5% by the time you guys see this video, that's just because we're in a volatile market, and that can happen within a minute or two, okay? But all of this information is relevant, and I think a lot of people are forgetting, really not paying attention to what is going on at Tesla, or really on a company-by-company specific basis. The whole market right now is painted with this uncertainty brush. All things are bad. Recession, recession, recession. Whereas in 2 weeks from now, when Tesla reports earnings, we're probably going to get a lot of good news that is not being kind of factored into Tesla's stock as of right now. And I think this news from Elon Musk kind of highlights that. Elon Musk dropped this bombshell on X about 2 hours ago or so. He says, for the first time, there will soon be a generalized pure AI solution to full self-driving. Just cameras and the Tesla AI chip with Tesla AI software. If you read this and you had no idea what was going on in markets or to Tesla, you would think the stock would react very well to that statement, right? You would think for the first time ever, there will be a generalized pure AI solution of full self-driving. I would think any company that said that would have a very good day that day. Well, it's not. And again, I think that's because of the uncertainty, because of the fear just kind of painted on everything right now. Company by company, the situation is going to be much different. There will be winners, there will be losers throughout this trade war, throughout this volatility. And with Tesla down so much, just 2 weeks away from earnings, I think we're in for a positive surprise over the next 2 weeks. First and foremost, because with the stock down this much, again, around 50% from all-time highs, you're not pricing in robotaxi. You're not pricing in Optimus, sure as hell. You're not pricing in what an aggressive expansion plan could look like for the robotaxi. You're not pricing in the new Megapack factory that was just announced like 2 weeks ago that's going to be going online by the end of this year. That's going to hopefully boost revenues at Tesla around 10% or so coming next year over the, a full 12 months of that facility being in operation. It's going to bring in $2 billion or so to the bottom line. There's only 3 billion shares outstanding. Simple math would say that's about 70 cents of a boost to EPS. Times that by 100 times multiple, that's equivalent to $70 a share of value added to Tesla. Did Wall Street care? Absolutely not. Just point these things out because no matter what happens in markets, you need to stay grounded in your understanding of Tesla or any other company you invest in, and try to distinguish between broader market volatility that is perhaps bringing down your favorite stocks and actual issues with the companies bringing down the actual stock. Good example of this is Nike, right? Yeah, sure, they're hit by some of the fear out there, but Nike is actually impacted a lot via these tariffs and a slowing consumer. Tesla, much less impacted than something like a Nike, if at all. Now, as you can see from this clip, it looks like Tesla enables a multicolor interior ambient light scheme when FSD unsupervised is activated. And Tesla has officially announced that Giga Texas production now uses FSD unsupervised to deliver cars from the end of the line to the outbound logistics lot. Over 50,000 driverless miles have been accrued between California and Texas factories so far. And you can see here a third-party branded Tesla superchargers, these are V4s, are now becoming more of a thing to see out there on local roads. This is from EV on the Move in Billingshurst. And Tesla is threatening a lawsuit after Canada freezes $30 million in EV rebates. And if you are a hacker and you are looking for a job, Starlink is offering $25,000 to security researchers who can hack the Starlink system. So if you want a challenge, well, reach out to SpaceX. Elon Musk also shared this post from Sawyer Merritt today that says 44% of voters have not tried any version of Tesla's FSD supervised V13. Elon Musk says Tesla's full self-driving will amaze you. And again, that's the only thing that really matters for Tesla at this point. Is Robotaxi, number one, doesn't launch in Austin, Texas in June. It's pretty clear it's going to. We've gotten reiterations of this multiple times now. The second big question is, how is the scaling process going to look like? Are we going to be able to scale fast here within 12 months? Are we going to be in 30 cities? Or in 12 months, are we going to be in 3 cities? That's going to make the biggest difference for a share price appreciation in Tesla. You obviously have Optimus. You have the cheaper, lower priced Teslas that should be coming to market over the next quarter or two here. We previously expected before the first half of this year was over with, so before June. That may get pushed out a little bit just because of the new Model Y ramping, and I think that ramp was a little bit slower than initially expected. I think there was probably more problems than Tesla was expecting. Albeit, we're back to business as usual. The Model Y is selling very well. You're no longer seeing these scary, Tesla sales are down 60% or 50% headlines. Those days seem to be gone at this point. And I would say that's even a positive for Tesla stock. Cantor Fitzgerald's analyst Andres Shepard reiterated an overweight rating on Tesla. He says, quote, "The company has prioritized domestic sourcing and maintains a high degree of vertical integration, minimizing exposure to import tariffs. Thus, we see it as better positioned and less impacted relative to other OEMs. However, we do expect some consumer backlash from Elon's polarizing politics to affect demand, particularly in China and Europe due to geopolitics," which is interesting because actually China has very good numbers right now. Like, you're in well in positive territory on year-over-year delivery numbers in China. Europe, little bit of a different story, but Europe, we only sell about 400,000 cars, give or take, in Europe on any given year. Tesla can sell, double or triple that in China in a good year. So it's not nearly as important as China. Now, if China was seeing demand slowing down, that would be a much larger issue. For an example, instead of Europe selling 100,000 Teslas, well, maybe you sell 65,000 or 70,000. So a net hit of like 30,000 a quarter, not the end of the world, 120,000 less for any given year. It doesn't even matter to the Tesla story. The only thing, again, that matters, cheaper, lower priced Teslas, Robotaxi, Optimus, and AI generally. Nvidia has announced that for the first time, the company will produce Nvidia AI supercomputers entirely in the US. Nvidia Blackwell chips have started production at TSMC's chip plants in Phoenix, Arizona. Nvidia is building supercomputer manufacturing plants in Texas, with Foxconn in Houston, and with Wistron in Dallas. Mass production at both plants is expected to ramp up in the next 12 to 15 months. Within the next 4 years, Nvidia plans to produce or essentially invest up to $500 billion of AI infrastructure in the United States. Now, option activity for Tesla today is actually quite neutral, but on the low dollar amount side, as Tesla is now down about 1.5% at the time of recording this video. You have 95 different trades from hedge funds and institutions totaling $61.1 million with a positive order value of 46%. For this Friday's expiration, open interest is about 52% to the call side, 48% to the put side. So a little bit more skewed towards calls, but not huge in any, which direction. Now, you do have about 66,000 shares today that are being covered on, But again, we'll see in after hours. You tend to get more finalized numbers here, so we'll report back on what the actual figure looks like. Global inventory numbers for Tesla remaining very just stable down here. There's low inventory for Model Y, for the Model S, Model X, Cybertruck. Model 3 has about 4,000 in global inventories. That's low-ish historically to the Model 3 itself. So you have low inventory. That means you don't have a demand problem. If we did have a demand problem, Tesla would be cutting prices, and that's potentially what you need to watch out for if you think Tesla does have a demand problem. If you think they have a demand problem, well, do they cut prices or not? If they cut prices, they have a demand problem. If they don't, they don't. Okay? We kind of learned that lesson from 2022. So while a lot of people are going to say and have said in the past couple of months that there is a demand problem, I don't believe that for a second until Tesla starts cutting prices. And that, my friends, has not happened yet. Now, Tesla currently running about 2,000 different ads with Google, and we could see Google Trends data. We'll go ahead and refresh this page. It's actually curling upwards from the prior report. Cybertruck at 16, Model Y at 18, Model 3 at 16, Model S at 7, and the Model X at 5. Let's get into broader market news today, because leave it to Trump to destroy an otherwise good day in markets with just a couple of headlines. Like, you gotta say, Trump is the destroyer of wealth in markets this time around. But don't be confused. This is an opportunity. Hopefully markets crash from here and they stay down for a long time and you're able to make extra money and put that money to work. 10 years from now, you're going to give a crap less about what the tariff looked like and what Trump said on this day, or that Trump was even president. It's not even going to matter. And that's what you should be focused on. And right now, you want to pick the companies you think are going to be long-term winners when they're getting, again, painted with this brush of uncertainty, of recession, of tariffs, of bad things coming. Yeah. Oh, now this is actually hilarious. Trump says the stock market is up today. Well, it was up today before you started talking. So yeah, no longer, my friend. Then again, who knows? The markets could be up 5% by the end of the day with this kind of volatility. Donald Trump says that pharmaceutical tariffs is in the not too distant future. Trump says all he has to do is to impose a tariff to get companies to manufacture pharmaceuticals in the US again. Unfortunately, it's not that easy just to switch manufacturing of pharmaceuticals from a different country to another country. Takes a lot of time, and I don't know if Trump fully realizes this. Trump says Nvidia's announcement on building AI servers came because of the election and tariffs, and that's probably pretty accurate. Donald Trump says today that he will solve the Iran problem. And there's actually a lot of people out there today that are kind of nervous about a potential war with Iran if these nuclear talks fall apart. We did get good news over this weekend that there is a friendly tone to these negotiations, that Iran wants to make a deal, which, let's be honest, if they don't, they get wiped out. What choice do they have? Right? But again, with Trump, there is a lot of volatility and anything can happen. People are talking about war. War tends to be kind of a short-term fear thing, and then it's over with. Matt Gaetz said, if other countries don't like our reciprocal tariffs, they can just allow American goods made by American workers freely into their markets. Donald Trump says that Iran cannot have a nuclear weapon, and no matter what political spectrum you're on, this is something you have to agree with. Trump says that Iran wants to deal with us, but they don't know how. Another meeting with Iran on Saturday. Trump says there are some proposals on stopping the Ukraine war very soon. And one of the comments that really started to kind of beat down markets a bit is when Trump said that markets are very strong once they got used to tariffs. And it's not that we got used to tariffs, it's that we now think there could be some deals done. So if Trump's really under the assumption that markets just got used to tariffs, like, that's not true, right? That is not true at all. If anything, we got just more dissatisfied with tariffs, again, until the positive developments started to flow through. If Trump thinks he could just continue on business as usual without a crisis, he's got another thing coming. And that's why the markets reversed the early market gains, or early morning gains that we had in markets. Financial hardship withdrawals are rising per Vanguard, with a record 4.8% initiating a withdrawal, up from 3.6% in 2023. Yikes. And you can see the recession risk is rising. Goldman Sachs CEO says recession odds have increased. Meanwhile, economist Kevin Hassett says he's 100% not expecting a recession. Betting markets like Kalshi show a 56% chance of a recession this year. That is, again, uncomfortably high if Trump wants to continue on this tough talk path with tariffs and delay things even further and prevent companies from investing capital or hiring. The odds of a recession are going to dramatically move higher. 56%? Let's talk 80, 90%, 100% if we don't start to get some deals done. We also did get some pretty weird news as well this morning that China's President Xi is urging China and Vietnam to ensure smooth trade. They're like trying to get Vietnam to side with them on this tariff situation, to kind of join forces to, quote unquote, not get bullied by the US. China is also encouraging Chinese firms to invest in Vietnam. According to the New York Fed survey in March, expectations for stocks to rise is at the lowest level since June of 2022. And according to the New York Fed survey, the share of households seeing a worse financial situation is the highest since October of 2023. And the expectation in March for unemployment to rise to the highest since April of 2020. So people do not feel very good out there about the economy. The survey found accelerating food and rent expected inflation in March. And in March, households were more pessimistic about jobs and future earnings. But look at this. US 3-year inflation expectations held at 3% in March. So that UMich survey, again, just shows it's super political. And when you look at non-political surveys, you get inflation expectations that look a lot more muted than the political ones. Although 1-year inflation expectations did rise to 3.58% versus 3.13%. But again, this is roughly half of the UMich 1-year inflation expectation survey, which is almost 7%. So this is actually good news today. And look at that, Donald Trump has once again threw the markets a bone. Trump says he is looking to help car companies, GM, Ford, Stellantis, and Tesla being, well, the obvious winners from that. Donald Trump says Iran must give up its dream of nuclear weapons or face a harsh response. Trump says there will maybe be some things coming up. I spoke to Apple's Tim Cook. Trump says, I'm looking to help car companies. Car companies need a little bit of time. Donald Trump reiterates that he is a very flexible person. Donald Trump says the EU was formed to hurt US trade. And Donald Trump says, of course, he does not want to hurt anybody. But he reiterates the EU is taking advantage of the US. Trump says the EU has to come to the table, and they're trying to. Trump says that China and Vietnam are meeting to figure out how to hurt the US. Now here on the day today, the CNN Fear and Greed Index is coming in at 20, which is actually getting close to leaving extreme fear. Above 25, you breach into fear. So markets are still overall pretty washed out, pretty negative. Sentiment is pretty low. The percent of stocks trading above their 50-day moving average back up to 17%. This puts you, back in like some of the low end ranges of 2022. So even though today, better day than what we've seen recently. You're up almost 22% today on the total of stocks above their 50-day moving average. You're still at pretty damn low levels. And the AI Investor Sentiment Survey shows that almost nobody's neutral right now. 12.5% of investors are neutral. They're either bearish or bullish. That's the fact of the matter. Bullish investors at 28.5%. and bearish investors at 58.9%. Almost twice as many bearish investors than bullish investors. So if we start to get this quote unquote Trump being flexible, making deals and exemptions and all of that, then there is room for markets to do well here. Like, that is not impossible. Again, keep in mind, we do have earnings today and after hours with Applied Blockchain. Tomorrow, which is a data center name, kind of the AI demand story, could be important with that one. Tomorrow morning, you have Bank of America, Citi, Johnson & Johnson, PNC, Albertsons, and Ericsson. Tuesday and after hours, tomorrow and after hours, you have United, Interactive Brokers, and JB Hunt. Wednesday pre-market, ASML, US Bank Corp, Abbott, Progressive. Wednesday and after hours, Alcoa, Bank of Ozark, CSX, Kinder Morgan. Thursday's your big day, TSMC, United Health Group, Huntington, American Express. And then Thursday and after hours, you have Netflix. TSMC is the big one for this week, though, because how is AI demand? Has the uncertainty hit that? Are companies not investing as much in AI, or is this actually a positive catalyst for AI? If companies are being forced with higher tariffs, do they try to use AI to make up, some of that margin, to become more profitable, to become more efficient in operations? There is a positive case from these tariffs for AI and for AI demand. Don't forget that. But really the big story for this week, again, minus any crazy news headlines that come out, it's going to be retail sales on Wednesday. You're expecting a 1.3% month-over-month number. This very well could determine whether Q1 GDP is actually going to be negative or positive. Excluding gold imports, GDP is down negative 0.3%. Okay, if you include gold imports, you're negative 2.8%. Okay. So you're negative either way, but the gold adjusted GDP now is negative about a third of 1%. If retail sales come in bad, then you're kind of confirming a negative Q1 GDP print. Okay, if they come in good, then you may be able to go positive on that. Okay, and you do have high expectations, so we'll see what happens there. Now, on Wednesday, you also have a speech from Fed Jerome Powell at 1:30 p.m. What does Powell say about the volatility, especially in the bond market? Is the Fed looking to support the bond market, as Fed Cook mentioned on Friday? One of the reasons why Friday was actually a good day for stocks. And overall, does he change? Does his tone change? Is he more concerned about the economy? Is he concerned about inflation? Does he kind of pivot? Obviously, anytime Fed Jerome Powell speaks, for the foreseeable future, it's going to be a massive catalyst for markets. Now, coming out tomorrow, you have some soft data. You have export prices, import prices month over month. That's not soft data, but New York Empire State Manufacturing Index, that is. You have a speech from Fed Barkin. Fed Cook speaks later in the day at about 7 p.m. And then some GDP data out of China. So tomorrow you have a little bit, but it's really Wednesday that is the big day for markets. At least from an economic data perspective, obviously earnings on Thursday is going to be critically important as well. So let me know what you guys think about this down below in the comment section. Have a fantastic rest of your day, and I will see you in the next one.